Welcome back to The Open here on BNN Bloomberg. Thank you for joining us. Earnings season is now in full swing here in Canada. Among other things, we got numbers from Canadian tech giant Shopify early this morning. For more on those numbers and Cineplex as well, we're joined by Bloomberg's Stephanie Hughes. Stephanie, thanks a lot for joining us. Shopify stock fell on the release of these numbers at about 7 a.m. Eastern time. What is it that concerns investors?
Yeah, that's right, Paul. So I should say that Shopify's revenue of about $2.8 billion managed to come ahead of expectations, growing about 31%. But however, as you mentioned, the U.S. listed shares were trading a bit lower in the trading day, in the pre-market trading day today, falling by nearly 8%. And that's because the Canadian tech darling's free cash flow guidance disappointed investors and overshadowed what was otherwise a pretty strong holiday shopping performance. So Shopify management expects that free cash flow guide will come, or the margins will come in the mid-teens there. And that's what our Bloomberg analyst pointed to, our Bloomberg intelligence analyst, saying that this overshadowed what was otherwise a strong fourth quarter sales. But they said that the free cash flow guide was really not a major issue, just given the timing of Shopify's investments there. So one thing that, one thing that Shopify was looking forward to doing, and one of its main goals, is to attract larger retailers like Mattel, hoping that these large retailers will bring a larger order volume that will help propel growth even further than its usual clientele of mom and pop shops. So the stock did manage to reverse some of the losses, playing a little red light, green light there. As you can see, it's back in the green again, but a bit sideways. So we'll keep tracking shares throughout the trading day, including those listed on the TSX, which will start trading in a few moments' time there, Paul.
Shopify, indeed, as Stephanie points out, up now in pre-market trading. It was down as much as 10% in the minutes after the release. Then that decline was pared back to 5%, and now it's up by 2%. Okay, let's talk about the results from Cineplex, Stephanie.
Right, so Cineplex, the adjusted EBITDA managed to come in line with expectations, though there was a lower revenue growth, kind of lagging a bit there. So, but what's more important than the fourth quarter read, for analysts at least, is the tone that's been set for 2025. RBC analyst Drew McReynolds said the box office revenues in the first quarter had a really strong start to them, and he expects that the film slate for the rest of the year is expected to be pretty strong as well. So box office revenues grew by nearly 20% from last year to over $147 million. That's perhaps because people are flocking to the theaters to watch some of these award-nominated films before the Oscars air early next month. I was one of them watching The Brood List. Definitely recommend for those who can sit through a long movie. But Scotia Bank analyst, I should say, Mariagi, said that Cineplex is also coming out of 2024 with some strong momentum based on releases like Wicked and Moana 2. And the media division improved as the digital at-home segment improved as well. So overall, analysts are seeing these earnings as pretty neutral. Could be better, could be worse. But 2025 is what's in focus for analysts there, Paul.
Stephanie Hughes on Shopify and Cineplex, two big Canadian companies that have come to market with results. Thanks, Stephanie.